Hey guys, welcome back to the channel. Hope everybody's having a fantastic weekend. Today's session, I want to kind of go over habits of traders. Okay, so many people look at people, they watch people, they want to know their habits, and so many people come to the markets with bad habits. Some people come with good habits. Some people need rearrangement of their habits, as you will. But there's so many different aspects to the habits that really make successful over not successful traders. Keep in mind, guys, there's literally 90% plus of traders who come to the markets, they're wanting to make money, but they fail. Okay, over 90%. That is a massive number. So to make yourself an edge in the markets, to be that success story that you can go back and start making money, making a living, having the financial freedoms that trading does give, it takes a lot of work. Roughly, it took me a good 4 years before I could literally say that trading is making me a living. Took me a long time, but it's gotten to the point to where everything is just fluid. All my habits, all my bad habits in the past have literally just been thrown out the window. My good habits is what really makes me come to the markets, be able to continually trade over and over and over again, and end the day on a green day. It's very, very, very rare that I actually end the day on a red day, but I do have some red trades during the day, but I still come out on green on the top. Okay, that's literally the most important fact of trading. But today, what we're going to cover on is a little bit of key areas that are important for new traders to understand, that you've got to break these habits. You've got to have some consistency with your methods and your process and how you're going to, evaluate the market, what you're going to look at, so on. But I'm going to go ahead and just cover these. Okay. Now I've got them written down here for you. So bad habits of unprofitable traders and how to fix these habits. Okay. So unprofitable traders generally always trade too much. Okay. That edge that the small traders have over institutions, that they can pick trades carefully, only trade the best trends and entries. The less they trade, the more money they make, because being picky gives traders an edge. Okay. The moment I had problems with this is, I finally got my account to over that PDT roll of the 25K, as you will. And I had unlimited, trading capabilities at that point. And I started over trading in a massive way. And, you end up spending 20,000, 30,000, 50,000 on the day of all these trades only to make $500. I mean, what's up with that? Or $1,000. Okay. So the moment I was able to buckle down and be very consistent with a good trading methodology was being picky. You've got to be picky, but you can't be too picky to miss trades, obviously. But you have to be picky, only looking for those, 8 to 10 star setups out of 10. Okay, 1 out of 10 setups. I'm always looking for that top tier of a good looking trade, and I see hundreds of trades every day. So I want to make sure I'm looking at the one that best suits my high profitability setup, as you will. And it does take a massive amount of training your eyes to do that. Another thing is unprofitable traders tend to be trend fighters. Okay. I can't tell you how many times, especially new students, they come into the markets, they think they know how to play it, and they try to fight the trend all the time. Okay. That is literally your worst enemy in trading, is fighting the trend. Always wanting to try to call the top and call the bottom. They eventually will be right, but you got to realize their account will likely be too small by then to really profit from that reversal. Money is made by going with the flow of the river, not paddling upstream or against it. Okay. So that's what I preach about so many times to my students, is you have to go with the trend. I don't care if the market's overbought. I don't care if the market is oversold. I don't care where you think the market is going. As long as you can analyze the chart, analyze the trend that is trading currently and what the market as a whole thinks, you can play with the trend. You got to flow with the stream, as you will. And that's how you're going to make money consistently within your account. Trying to call the tops and bottoms is going to destroy you. Okay. I can never pick the top. I can never pick the bottom. You try to do that, you're going to be sitting on your hands and fucking up your money and just messing everything up. So don't try to call the top and the bottom. Play with what the motion looks like. The most profitable trend is giving towards your, benefit of your portfolio. So look for that spotting, look for it. Don't try to fight the trend. Another one is taking small profits quickly. Okay. They all of a sudden see a green trade. Oh man, I'm making money. I'm green. and they letting their losing trades run in hopes of the bounce back. Okay, that's some serious reverse that needs to go on here. This is a sure path to failure. Okay, profitable traders understand that their risk reward ratio is big wins and small losses. Being quick to take the profits while allowing the losses to grow is a sure way to blow up your account. So as soon as you see a good green trade and you're up 10%, why take the profits when you finally found your winner? Making sure you're locking in profits is very important, but why are you so adamant to let your losers continually be your biggest percentage on the downside of your account? No one wants to come to the markets with, an average of 50% losers and an average of 10% winners. I mean, where's that? What's happening there? That account is depleting continually in a massive way. Okay. So that focus has to be on kill the losers very quickly, let the winners run a little bit, and take your profits. Okay, so learn to understand that judgment that you have to kill those losers quick. I can't tell you how many times I'll have a loser here and there, but you know what? As soon as I see the trend start to change against my favor or to breaking a support line, I'm out of there as quickly as possible. Okay. And I use TrendSpider for my charting analysis here, but the moment I'm looking for my channel, okay, as we see here, this is S&P 500 on Friday. And the trend has showed me it had a top here and it's following within a channel. But as long as I know where this channel is headed to, it looks like it's going down. Okay. So I've got to play the downside of this trend. And the moment it wants to break a support or break a resistance, I have to understand that I have to kill my losses as quickly as possible. Okay, if I'm playing, why play the upside of this when it's obviously playing against me? So you would have to play the put side of this. Now, obviously on the reverse side of things, when this thing is pushing up, I have to understand that the channel is pushing up, up, up. I can't be like, okay, well, this is the top, I'm going to start shorting here. No, don't be trying to find the tops. Okay, as long as the overall trend is channeling in your favor, play your winner as you will until it gets to that point and decides to start cutting back down. Okay, and then take profits. Don't just hang on for dear life forever. But you obviously don't want to be like, okay, well, let me start shorting here at the top and it starts going up and I'm gonna just wait to be right. And by the time it takes all day long to finally be right, that's a disaster. Okay, don't try to short the top and then finally at the end of the day you were obviously right after a long period of time and some serious emotional roller coasters, as you will. So very important. Don't let your losers run against you. Okay, I kill them. I mean, it could be as much as $2. It could be as much as $500. As long as it looks like it's going against the trend that I'm currently trading within my channel, I'm killing it. Wanting to be right more than wanting to make money. That's an important thing. Pride is the biggest thing with traders. They get cocky. They think they're always right. They think if they're putting their money, it's all about the amount of money that they have in their account and how many cars they have and how many big houses they may own or whatever it may be. You can't be cocky in the money, okay? And trying to treat the markets as such as like you know what you're doing, wanting to be right more than wanting to be wrong. Sure, I've learned an edge in my market, that I trade, but I'm not always right. Okay, you've got to realize that. Sure, I've made success in my money. I've made success in the markets and trading, but I'm not always right. Okay, I'm more focused on trying to make the money that I can potentially get on the edge that I've created for the markets, but I'm not all about trying to be right 100% of the time. There is no way you can do that. So wanting to be right more than wanting to make money will be a very expensive lesson. A trader who doesn't want to take losses will most certainly balk at reversing his position because it signifies personal failure. A profitable trader is not afraid to get on the right side of the market to start making money. Unprofitable traders now trade too big, okay, and risk too much to make too little. Okay, what's the greatness of that? Why do you want to trade too big and risk too much to make too little? That kind of goes back to where we're talking about the over trading too much. Why would I want to stick $100,000 in to make 200 bucks or 50,000 in to make $100? Look for those good setups that you want to make money. I like the guys who can put in $5,000 and come out with 500 bucks. That's what I want to look. I want to look for those setups that I can stick even $1,000 in and make 500 bucks. In options, we've seen that so many times that you can throw a little bit of money in and make just as much money as some of the big guys that are throwing massive amounts for only 2%, 5% gain. So with that being said, it's very important. It's very important to understand that you can't just jump into a big position and expect to make a big amount, obviously, when they're trading to that degree. So the biggest key to profitability is to avoid the big losses. Your wins can be as big as you like, but the losses must be limited. Now, unprofitable traders watch CNBC for trading ideas. Okay. Now, don't be going to CNBC late at night and be looking at, Mad Money with Mike Kramer, and he's bashing this stock or pumping that stock, and like, oh man, this is my watch list for tomorrow. I'm gonna be writing this down, and I'm gonna be trading these stocks that he says this and he says that, and he's bashing this or bashing that. I can't tell you how many times those guys are so wrong. Okay. Don't be looking at those guys for your ideas. They're literally paid to be on there to give their analysis or sentiment, whatever it may be. They're not there to give you trade ideas. They're not there to help you grow your account. Okay. So don't be looking at it as a way that this is your watch list. I'm going off of these guys to know what they're doing. Like I said, I can't tell you how many times they don't know what they're doing. Okay. They're there to pay to act like they know what they're doing. Unprofitable traders want stock picks, while profitable traders want to develop trading plans and systems. Okay. Sure, I give stock picks in my chat room. Sure, I give stock picks for people that want a little bit of an alert that I'm playing and like to shadow trade, as you will. I don't recommend shadow trading. Okay, it's there's a lot of people that have made good money off of it, and you can make good money off of it. But at the end of the day, they're helpless without that person giving the alerts. Okay, what if I up and just quit giving alerts, or what if up and these guys all of a sudden just quit giving alerts? Is that trader going to be able to be successful without his now, gone alerts, as you will? No, most likely not, because that is what he's literally sucked off the bottle, as you will, to achieve his portfolio growth. Okay. So unprofitable traders, they always want stock picks, thinking that is the way to their success. Stock picks, I hate to say it, is not the way to your success, guys. Why do you want to just go through life getting the easy way out, the easy road, that as long as this guy keeps giving me these alerts and he's making good money, as long as he's doing that and he, doing this, calling this and calling that, I can keep making money. Okay. But there's going to be one day that may end. Okay. This guy may up and quit giving an alert. Then you're going to have to go be looking for the next guy for the next alert to see if you can follow his little trade plan and work to make your way back out of it. So that is not the success to trading. It's just not a profitable way to do it. So you want to learn why he picks those plays, why he has his system, why he has his trade plans, and so on, and go from there. That is how you literally, teach a man to be successful, not, feed him and spoon feed him and think, oh, well, he's looking for short-term growth. He doesn't care about, trying to make this a system for himself or anything. Okay. So learning to trade is a huge, huge plus. Unprofitable traders think trading is about being right. It's not about being right. We just talked about it here a little bit ago. Profitable traders know that your profitability is about admitting you are wrong quickly and being right as long as possible. That's literally cutting your losers quickly and letting your winners run a little longer. Okay. You want to be as right as long as possible. As long as that stock's working in your favor, you can hang tight and roll with the flow. Unprofitable traders don't do their homework because they think there is a quick and easy route to trading success. There is no quick and easy way, guys. I'm literally working 12 to 18 hours every single day for my stocks, for my analysis, for me searching for my own plays, playing my plays when the day, when the opening hours finally present themselves. It's a full-time job, guys. It is not an easy way. The days that I, back in my early days when I was being lazy, I always fucked up. Okay. I always come to the markets and be like, oh man, what looks green on the markets today, and I'll play it. Sure, you can run with it. You might get lucky, but there was no consistency, as you will. There was no consistency of that process. And that's why I really try to iterate to my students that it takes a lot of studying. It takes a lot of digging in, looking at charts, looking at news catalysts, looking at certain setups, looking at the sectors that are hot, like airlines and casinos and cruise lines were hot this last week. So that's what we played. Okay, those sectors were hot, charts set up perfectly. We found the channel that they played in and we banked. So unprofitable traders, number one question is how can they make how much can they make if they are right? While the profitable traders are concerned about how much they can lose if they're wrong. Think about that for a minute. Profitable traders want to know how much they can make if they're right on this trade. Well, I don't know how much you can make. It all depends on your entry, your potential exit, what you see in the setup. I'm not looking about how much I can make. Okay. You've got to look how much I could possibly lose if I want to jump in this play. If I feel good about this play, it looks like it's good setup. I don't know how much it can make me. It could continually push and push and push and break all sorts of resistance and make me a pile of cash, or it may not. Okay, maybe it jumps up and is weak, and then I kill the loss as quickly as I can. So that's how much I have to understand. How much could I possibly lose? Focus on that versus how much you could possibly make. Like I said, it's not about being right. It's about how much money you can save from losing or possibly make from gaining. Now, trading markets might sound like a dream for many people, but in truth, it requires discipline, consistency, and emotional intelligence. Do you have that in your daily life, guys? Do you have discipline in your daily life? Do you have consistency with what you do? And do you have emotional intelligence? While many people dream of being a successful trader, the unfortunate reality is that most people will never end up being profitable. Can't stress that enough. Like I just said, 90% plus people fail at trading. They will never end up being profitable. The good news, however, is that the reason most people aren't successful is that they're unlucky, but because they have a few bad habits, they're holding them back. Here are the major hurdles that end up holding back most traders, and see for yourself if you can notice the pattern. Okay, we're going to be breaking down these habits and how we can try to fix them, how we can try to make them better. So this is a big one right here. This is probably the biggest one. It's the one I teach in the very beginning of my classes with the students, that you have to make rules. Without rules, you are a unlimited bad habit making person. Okay, you can just make all kinds of bad habits because you have no rules. Discipline is the key for any trader, and the biggest mistake unsuccessful traders make is that they don't stick to their rules. They don't come up with a strategy beforehand and make sure you've tested it on maybe even paper trading for at least a couple months of profitable, then stick to it. Have a maximum loss amount that if you hit, you walk away. Made 5 bad trades in a row, walk it off and come back another day. Do you know when to take a profit or a loss on a trade? Whatever you decide to do before the market opens, stick to it. Okay? You've got to have those rules. If you don't have those rules, you could blow up your entire account. You could just, let the emotions ride on this and ride on that. You lazy traders won't make rules. And I've seen it so many times. They're like, hey, Mike, I keep losing, man. What do? I've lost, half of my account now in this trade and blah, blah, blah. And I'm like, well, what are you doing? Or do you have rules? Are you sticking to the rules? No, I haven't come up with any rules. Or, are you journaling your trades? Do you know the data of how you're looking at your trades and getting out of the trades? No, well, why are you throwing monies in the market without knowing what you're doing first? Well, I'm just trying to make money. Well, it's obvious that you're not making money, is it? You have to stop. Okay. If you're losing money, I can't stress it enough that you have to stop trading. You have to stop. Go back to the basics, so to speak. Get a paper trading account. Start playing and tweaking your process little bit by little bit until you start seeing a pattern that, oh boy, with this fake money, with paper trading, with knowing the process of why this trade looks good, why I can finally make money on the paper account, all makes sense. Now I'll start using real money and start, reaping the benefits of my hard work and rewards. And that's all comes to light. I can't tell you how many times I blew up real money accounts before I finally figured that out. Okay. That's why I say it's best to save your money until you are ready. Don't go blowing your money and just, continually blowing it day after day and going red. You're all about just giving your money away in the markets. If you do that, you might as well just hand it over and I'll save it for you here and, give it back when you're ready. At the same time, traders need to understand what their ideal trade looks like. For small cap day trading, it can mean knowing what your ideal company looks like in terms of market flow, price movement, technical indicators, news announcement, etc., etc. But when in the market, stick to what you know and you're experienced with, especially if you're a beginner struggling to be consistently profitable. Being impatient is another big factor, just like not sticking to your rules. Even if you have a trading strategy, a well-implemented plan, the second most common thing that gets traders in a lack of patience. Most traders are too eager to jump in and trade low-quality setups out of that eagerness of trading. This is what can make Mondays pop so well sometimes. I've seen it so many times. So many people are like, man, I hate the weekends. I'm ready to jump in the markets first thing Monday and get, this pile of cash that you're dreaming about on Saturday and Sunday that is just going to be phenomenal come Monday. Okay. So it takes a lot of preparedness. That's what causes Mondays to be kind of choppy sometimes and actually have some high volume. So be careful of that. However, jumping in too soon on poor trades increases your chance of taking losses. Instead, traders should be willing to wait. Okay, that's what comes to the patience part of it, to perfect the opportunity before jumping into the market. Like a fisherman waiting for that perfect catch, traders should be willing to wait for the top quality setups rather than risking their money on trades that aren't the best because of the impatience. Many times this means not making any trades at all in a day. And that's a possibility that successful traders are willing to accept. If you do not see a setup that you know very well, you've come down to the data, you understand what makes a good trade to you, and you've looked at all your past winners and we're like, man, there's a common denominator between all of these. I'm going to keep looking for that. I'm not going to be looking all the common denominators with my losers. Sure, I want to understand it and be able to spot it and know that it's going to be losers, so I'm not going to take them. People also refer to this as the fear of missing out, okay? That by turning down less than perfect trades, they feel that they're missing out on all the profits that others are making. In reality, FOMO is a trap that many fall victim to. Don't let it be you as well, okay? So don't go chasing green candles, thinking this is the big piles of cash moment, and you didn't take any, risk management analysts. You didn't understand how much you could possibly lose. When you're chasing a big fat green candle, I'm looking at, well, how much could I lose by doing this? And I see how much I can lose by doing it. It's jumping way up, and I missed my opportunity to enter. So you know what I don't? Most of the time, I don't chase it. I stay away from it. I can't tell you how many times the FOMO trap plays will destroy any potential profits on that play very quickly. Another reason is getting emotional. Okay, we're human. We all have our emotions. Trading is stressful, and it's easy to think that the world's ending if you had a bad day, or that you're a fantastic trader because one of an excellent day. The truth, however, is usually somewhere in between. Getting overconfident and excited can make you less disciplined and ignore doing your homework. Perhaps a big loss that was out of your control has made you scared of trading again or trying again that next day. But arguably, worst of all, anger and frustration can make you do stupid things, like doubling down on a losing position, hoping it'll make you jump back, or getting desperate and taking positions you wouldn't otherwise, okay? So don't let these emotions make irrational decisions, okay? You have to think clearly. You have to think rational. You can't let the anger and frustration of a couple losing trades set you back. And let's just say you're still in a losing trade. Like, man, if I double down and average down, this is going to come out good in the end. No, most of the time you were in the losing trade in the beginning. Why are you trying to throw good money after bad? It's a bad situation. Emotions are the enemy of successful traders. It's the people who can keep their feelings under control and look at the markets dispassionately that will pull ahead from the rest of the pack. Okay. I can't tell you how many times under pressure, under any circumstances, I can't let the markets, make me think irrationally and take, some quacky, mediocre trades or crap plays out of desperation, trying to make the money back or so on. Okay. This is a big factor to break. And this is literally probably one of the hardest habits to break, is the emotional factor that goes with the money and the way the markets are playing games with you and things of that nature. Never think of the market as your enemy or it's out to get you, so to speak. I never think it's just a money-making machine. that I may have incorrectly analyzed before jumping in a particular setup. So forgetting the risk reward ratio. This is another thing that so many people break. Unprofitable traders often trade too big and risk too much to make too little in return, often taking small profits while staying in their losing trades for far too long, hoping that they will make their money back. Instead, traders need to understand that the importance of the risk reward ratio when they're trading. For every dollar they risk, they should aim to make $1.50 to $2 in return. This way, even if they are right, less than half the time they still break even or make money. If your profit to loss ratio is too low, you'll need to be far more accurate to be profitable, which is unrealistic. Winning trades should have a massive upside and a very limited downside. If you look at your trading history, you can find out for yourself what your ratios are. And if they aren't good enough, they could be the main reason why you're struggling and a sign you need to change your strategy. Final thoughts on these emotions here. If you haven't noticed already, all these things are mental and emotional. The biggest problem holding a trader back from success is themselves and how they react. In contrast to many people trying to dabble in the markets, successful traders know themselves, how they react, their emotions, their strategies, that have plans set in place that they follow through on regardless of how they feel. There is no specific feeling of how I feel on the stock market. I come to a trade, I see a setup, I take it. I don't feel no different taking it versus a losing trade. Taking these things into account could make all the difference between another person who lost money trading their markets versus a consistently profitable trader. Maybe you took a lotto account. Maybe you took a lotto trade, guys, and you let that lotto trade ruin your entire week because you lost on it. You went too big in it, and it destroyed your whole mindset for the remainder of the day or the remainder of the week. Don't let a losing trade flare up your emotions and make irrational decisions on the trades after that. It's a recipe for disaster, and it's a hard habit to break. Like I said, many people think the market is just out there to kill you just because you made a bad decision on a trade and you turned a lotto into an investment, so to speak, instead of a trade. Don't let it affect how you're gonna react the rest of the day or the rest of the week. As soon as I have a losing trade, I've already forgot about it. I traded it. I played it according to my plan. I won that trade because it traded my risk management, and I knew how much I could potentially lose on it, and I lost on it. So I got out of it, and I'm done with it, and I'm moving to the next one. Completely forgot about it. Never let it affect you for your future trades as well. Now, how to obliterate bad trading habits. This is where we're going to try to start working on those habits. Let's make them a little bit better. Let's see what we can focus on to try to, fix this situation. We humans like to think of ourselves as self-governing, free-willed beings, okay? Set apart from other animals by our capacity to choose and to reason. Yet watch people or even yourselves closely, and you'll find that we are more instinctual and a lot more like other animals than we care to think. Animals are creatures of habit, and so are we. Habits help us navigate our lives, give us a sense of control and direction, but they also play an important role in simplifying our lives by reducing the amount of sensory stimuli we need to process things. When we're in the process of learning something as a habit, it takes the front attention in our brain. But as we keep doing it, it becomes an unconscious process so much that we're able to perform other functions simultaneously. For instance, when you're proficient at driving a car, you're automatically able to talk or think about other things at the same time. Habits thus save us time. They also save us energy, mental and physical, as they become automatic and unconscious since they require little to no effort. In a nutshell, that's the power of habits. And you don't just have a few of them, you literally have hundreds of them, if not thousands of habits. You form habits in the way you think and process information. You form habits in the way you eat, speak, dance, sleep, you name it. Everything about us is a habit. Now we're going to try to work on this good versus bad habits with trading. Our hardwired ability to form habits quickly help us create order and efficiency, but the irony is that it also makes us vulnerable to picking up self-destructive patterns too. Bad habits can look us into negative or rigid patterns of behavior. Not preparing or doing your research before trading, tweaking your trades once they're on when you plan specifically say not to do so, Not taking your trades for later analysis, comparing yourselves to others. I see this so many times where we're trying to compare ourselves to others, feeling bad about losses, feeling overly hopeful and excited about profits. All these habits, among others, have to be avoided. And insofar you keep performing them, they will prove to be deadly in the long run. Habits like these can be just as dangerous as an activity like smoking, but can be overcome by finding a substitute like vape cartridges and eventually stopping altogether. The brain is always in the process of creating habits. It is rather primitive in the sense that it doesn't discriminate between good and bad habits. It doesn't know the difference. You, through your conscious choice, have to show it. And the thing that not all habits are created equal. Some habits, especially the good ones, are harder to obtain but easier to lose, whereas other typically bad ones are easier to obtain and harder to lose. Think about that for a minute. Some habits, especially the good ones, are harder to obtain but easier to lose, whereas others, typically the bad habits, are easier to obtain and harder to lose. But whether we're talking about good or bad habits, the underlying principle is the same. Repetition plays an essential role in habit formation. Okay. It took me many times, tons of repetition to finally break bad habits. Tons of repetition make me observe the good habits and roll with it. When you do something with enough repetition, your brain decides that it could stop wasting precious energy thinking about it, so it checks out, and that the task becomes an unconscious process. But the only way to get there is through that repetition. Okay. Like I said, we can't change our bad habits overnight. It's got to take some serious repetition to finally break it. And that's why I say when you guys are constantly losing money because of bad habits, you have to stop trading real money. You have to go back to paper. You have to, think about what your process is, doing repetition to rework those habits in your brain. It's not about trying to change it, off of paper and live by it. You've got to trick your mind into thinking this is the way it has to be. But how much? Psychological research actually indicates that it takes about 21 days to develop an easy and simple habits, and a bit longer, maybe 2 months for habits that are even more difficult. So some of the difficult, habits that you're having problems with, it may take a couple months for you to break that habit, especially if you've been embedded with bad habits for so long. The longer you've had habits, the harder it is to break because it takes a constant battle of repetition to break that bad habit. Now, positive reinforcement plays a big role in habit formation as well. Let's say you profited from a mistake. Here's what's happening in your mind. The profits gained, even if you did not follow your rules, result in an enjoyable feeling. Your brain releases dopamine, and that's what dopamine does. It acts directly on the brain's reward and pleasure centers. It affects emotional responses and gets us fixated to see that those emotional rewards and to take action to move toward them, which is creating a bad habit. You got lucky. This is the main reason why people keep doing things that they know won't lead to a positive outcome, but they keep doing those things anyway. Their mind has been conditioned to drool in anticipation of its next fix of dopamine. It's the same thing in trading. If you profit from a mistake and do nothing to set the record straight, your brain automatically learns to repeat this process. Our brains are powerful, guys. How to obliterate your bad trading habits. Regardless of your predisposition and inherent inclination, humans are amazingly capable of change and adaptation. Now, I'm going to list below 4 easy steps as you can take to obliterate your bad trading habits. Number 1, write down the bad habits you're trying to quit. Write them down. You don't have to write a novel, just list them down and then pick one you will work on. Whether you're trying to let your winners run or stick to your risk parameters, start simple. Many traders fail to change their habits because they want to change too many things all at once. This is a big thing. Don't try to change all of them at once. You're going to have to work at them one by one. And like I said, it took me years. It took me years to finally work at one by one, get through it, focus on what I'm doing wrong, repeat it, repetition, fix it, work on, reprogramming yourself to start focusing on what really matters. So don't overload yourself. Just work on changing that one habit at a time. Number 2, list the triggers. Take some time to think about the things that make you crave doing your bad habits. If you find yourself tweaking your trades, is it a result of your need for certainty? If you fail to prepare an action plan before each trading session, is it because you feel lazy? If you can't seem to let your winners run, is it because you're thinking about the mortgage or the bills and want to book quick or sure profits? List those triggers next to each of the bad habits you wrote down. Number 3, substitute your bad habits with the good habits. Basically, you want to teach your brain to suffocate your bad habits and instead feed the ones that you want again through repetition. Here's an easy way to do that. Write a substitution next to every bad habit you wrote down. So if you got a bad habit, write it down and then write the substitution right beside it on your notepad or whatever it is that you're going to use to try to trigger yourself to start reprogramming. For instance, if you tend to tweak your trades and mess up the outcome, place your trades as per usual, but then get as far away as possible from your computer screen. Place some contingent orders and then go out. Do something else. The more you do that, the easier it gets until comes a time when your brain finally accepts that new habit as the norm. Number 4, that's why I say, got to trade small. Do you want to keep your trades on longer? Trade small. Do you want to be a more faithful to your plan? Trade small. Do you want your emotions to fluctuate less when you place and manage your trades? Trade small. Do you want losses not to affect you that much on your emotions? Well, then trade small or even paper trade. By trading small, you get to practice good habits. The more you practice those habits, the better you'll get at them. You'll develop certain skills, overcome basic fears, gain confidence, and if you're not trading small, it'll be very difficult to do so. But then as you get better, you shouldn't rest on your laurels and stay in your safe and comfortable little bubble. You should seek to increase your size incrementally so that you're constantly challenging yourself to grow stronger and more resilient. A bonus, guys, to this: share your bad habits with people. Okay, don't be prideful. There's nothing wrong with sharing your habits. Enlist your friends, family, or anyone close to you. You could even do it online via forums and social media and tell them that you want to eliminate a certain habit. Just this simple act of letting people know about your difficulties make them not so difficult anymore. Opening up will empower you to raise yourself above those difficulties. I have a theory. If you're an overweight couch potato, okay, just thinking this out loud, I'm willing to bet that you're not consistently a profitable trader. If your mind is well anchored in this habit of seeking short-term emotional gratification, it's bound to permeate all aspects of your life, including trading. It's very difficult to envision a successful trader or even an entrepreneur who's also an overweight couch potato at the time, somebody who lays around, does not really be proactive in any way or shape. It's possible, but it's unlikely, okay? So, however, it's not that hard to find a successful person who's also in great physical shape. In fact, it's very common because it's all connected. When it's frequently practiced and perfected as habits, become the inclination of the mind. We're actually cultivating in one way or another the patterns and inclinations of our lives. So to excel at an endeavor like trading, you have to make sure that you're cultivating the right habits in your life. When those are cultivated, they become you, who you are, and they inevitably pour into your trading. Okay, so let's just kind of break down those habits again here. When learning to trade or even improve your current trading, it's important to model yourself after those who are successful. Here's a list of habits of successful traders. Okay, I've got you a list here. Patient with winning trades, enormously impatient with losing trades. So in this sense here, let your winners run, cut your losers short. You work so hard to find a setup. You wait so patiently for your entry. You nervously put your money on the line, but then you wrongfully look to exit as quickly as possible. If you're going to go through all that hard work of finding a trade, let it work for you and pay you for that hard work. Number 2, making money is more important than being right. We're all in this game in order to make money. At the end of the day, that's what matters. Part of the process is taking losses and being wrong and accepting that part of the game. This goal is for the winners to be larger than the losses and end up on the plus side at the end of the day. Number 3, look at technical analysis as a picture of where traders are lining up to buy and sell. Looking at your chart, okay? When looking at support and resistance, realize this is where other traders are looking to buy and looking to sell, and you're wanting to go along for the ride. So understanding your trend lines of the channel that, this right here shows me that sellers are looking to sell, Buyers are looking to buy. When I understand the way the trade is working here, I don't want to be the guy who's in the middle. I want to be the guy who's looking at where the seller's at and where the buyers are at. If you can spot where buyers and sellers are going to be lining up on your chart and knowing on that support and resistance, it can make things a whole lot clearer. Number 4, before you enter, know where you will exit for that gain or for a loss. Where the sellers are going to line up is where I'm most likely going to be selling my position too. Know your plan, work your plan. When you enter trade, you don't have control over the market, but merely are reacting to what it does. Thus, as the market goes in your favor or against you, you must have rules that you stick to instead of making your plan up on the fly. Don't just change your plan in the middle of a trade. Know how much you're risking for how much you have to potentially gain. Is it worth it? Number 5, approach each trade with the same mindset you did on the previous losing trade. You can't always rewrite, but when you take a loss, don't let it affect your decision-making process when taking that next trade. What this leads to is skipping valid setups or taking invalid setups. How often do you find yourself skipping the winners and taking the losers? You have to take every trade and stay within the same clear-headed mindset each time. If you don't have a clear head, take a break. Don't revenge trade. If your losses are affecting you mentally, consider trading a smaller size. So when a loss happens, and they will, you won't be crippled by it. Okay? No loser should cripple your account. No loser should just cripple you, financially to where you can't refocus and go again. If it's crippling you, you've got to go smaller, guys. You can't let these losers cripple you. Number 6, use the naked charts and focus on the zones and not exact levels and targets. Okay, watch charts. Watch how they're playing. Use them naked. Don't use a 1.5 million indicators to help judge what you're not got focused like that. The more complexity to add to your charts and your trading plan can cause analysis paralysis, as you will, where you have too many signals and indicators telling you different things. Keep it simple. Stay focused. The market is rarely exact and usually finds support and resistance at areas of price rather than exact high-low price. Keep that in mind when looking at swing or areas of support and resistance. Realize that being uncomfortable is okay. Even with experience, you'll be uncomfortable. I talked about this in a class the other night with students, is you cannot be, no trade makes me comfortable. I can't tell you that I've ever been in a trade that I can just literally just sit back and just be like, man, I'm so comfortable. I don't mind holding this forever and ever. There is no such thing. You're going to have a little hint, at least a little hint of some uncomfortability within a trade. No one likes to take a loss and feel like they made a bad decision, even with experience. However, when things get tense or stressful, you need to have your plan to rely on, which will keep you clear-minded when making decisions. This only emphasizes the necessity of that trading plan that outlines what you will do when emotions are clouding your judgment. Number 8, trade markets that fit your personality. Trade markets where you feel like a participant and not an onlooker. Some markets are slow and steady, and some gap around and move wildly. Some have small ranges, some have huge moves. Depending on your personality, some markets won't fit your comfort level, and that's okay. There are many markets to choose from. Number 9, stop trying to pick the tops and the bottoms. This also goes back to the idea of making money over being right. Your analysis may tell you that the market will bounce or fall at a particular spot, but you must let the market tell you that it is. It's tempting to enter at the tops or bottoms with the idea of being right about where the top or bottom is. However, letting the markets tell you are right by waiting for that proper trigger, waiting for the other signs of trend break, will pay you more than the times you're wrong. Number 10, stop thinking about something being cheap or expensive. Instead, will it go higher or lower from here? Okay. I never look at the stock and be like, man, the S&P 500 is so overbought. I'm going to start shorting it here. Oh man, I'm getting squeezed. It's skyrocketing. Why are people still buying it? Why are they doing this? Why are they doing that? You got to stop thinking about being cheap or expensive. That's just not the way trading works. No matter what something is priced at, it can go cheaper or even more expensive from there. For example, before the 2008 crash, Ford, which is ticker symbol F, was priced at $8. During the crash, it went down to $4, which looked very cheap compared to where it was. However, it continued down to $1.50. So was it cheap then? Well, it could have gone down to 10 cents or even $0. The opposite situation would have been Apple, was priced at $400, which seemed expensive, yet it continued to $700, a 75% gain. Instead of looking at something that is cheap or expensive, instead look at the chart decide which direction the trend is and go with that trend. Okay. Goes back to where I was talking about here in the very beginning of the class, guys. Where's it at? Can't fight the trend. Can't find the trend. Right here. Unprofitable traders tend to be trend fighters, always wanting to try to call the tops and the bottoms. They eventually will be right, but their account will likely be too. So money is made by going with the flow of the river, not paddling upstream against it. So very important, guys. Don't try to time it just right and think you're going to be right on it. You have to go with the trend in this particular scenario right here. Number 11, willing to change sides, short or long, if the market tells you so. Okay. I'm an options player, so I'm playing puts and calls. When I see the same play, there's many times I've played the same stock in the same day, and I've played the long and the short side many times. So you have to be willing to change quickly. It also goes back to making money over being right. If the market is telling you that the trend is changing, listen to it. Ignore what the talking heads are saying on TV, what news events are occurring, or what you want it to do. Listen to what the chart is telling you. Number 12, trade aggressively when trading well and modestly when they are not. Not more aggressively to make up losses. Trading more aggressively when you're not trading well will only dig the hole deeper. Don't go aggressive when you're losing money. That's the worst time to get aggressive. Number 13, realize the markets will open again tomorrow. Oh boy, I lost today, but the markets are going to be open again tomorrow. I'm going to be presented with new opportunities, new trade setups, new market to play with. It's going to be a whole new day. There will be more opportunities even if you missed one today. No matter when you start your trading career, there will be long histories of trades, missed opportunities that pass you by. Even on any given day, there might be a huge move that left without you. No matter what move or opportunity you missed, the market will be there for you tomorrow, and there will be new opportunities. Number 14, never add to a losing trade. This is how traders blow and wipe up their account. When you are on the wrong side of a trade, cut your losses and move on. Never try and average up and compound a loss. Number 15, making money is the goal, but don't let it cause you to force trades. If you follow your rules and you still lose, it's still a successful day. At the end of the day, when asked, did you have a successful day? As long as you followed your rules, you had a successful day. If you break your rules and still make money, that reinforces those bad habits we talked about, which is a very bad thing. How will you know if you followed or broke your rules unless you have a trading plan that outlines these rules? Number 16, practice reading the right side of the chart, not the left side of the chart. Okay, the left side is obviously where the chart came from, but you want to predict of what the right side of the chart's going to do. It's good to back test the strategies by looking at historical data, but ultimately to make money, you have to be able to read the hard right edges. Okay, very right edges of the chart. Where's it going? Where do I see this potentially going? Is overall, trend bearish, bullish, or so on? Am I seeing the evaluation of what could happen here? We're literally at a key point of resistance now. We broke that resistance, and now it's, we broke that support. Now it's resistance. So how's the market going to play tomorrow? How's it going to play the next day? We're going to shoot up. We're going to shoot down. You've got to learn to try reading the very close edges of the market trade to signal where you can go from that point on. Now, number 17, have an edge, something that gives you an advantage over 50-50. We don't go to the markets to trade 50-50 setups. We go to the markets to trade, 10-30 setups, or 40-70 setups, or 4-100 setups, whatever you want to look at it. Often trading is compared to gambling. If you're a novice and don't have an edge, it definitely is gambling. At a casino, the house always has an edge where there will be end up on top given enough time. With trading, we want to be the house. We want to have that edge that puts us on top at the end of the day. Your edge could be a method of determining the trend, a way of determining that support or resistance, a way of entering the trade, a way of managing a trade in order to maximize profits, or all of the above. Number 18, 1 or 2 trades a month makes their month. Grind through a bunch of small wins and smaller losses, but only if you make the month. Not every trade needs to be a home run. Being successful at trading is a long process that includes a lot of singles and some strikeouts, but it's occasional home run that keeps us coming back for more. You can have a very successful career simply taking small winning trades one after another. A losing trade is not a reflection on themselves as a trader. After doing all your analysis and you happen upon a picture perfect trade, sometimes the trade will start to fail. Afterwards, it's easy to then second guess your technique, your rules, and yourself. You must realize that losers are part of the game. No one is a perfect trader. You will have streaks of winners, streaks of losers, but the important thing is properly managing your account to not give up. Often you will hear stories about individual traders, typically from someone who is wanting to sell you something. You made amazing profits, had amazing winning streak. What you don't hear is that they are doing overall, over the long term. Are they still positive? How did they handle a streak of losses? Number 20, their business isn't trading. It's finding the right trades. Most all traders' time isn't spent being in a trade. Instead, it's finding the right trade. As mentioned above, after going through all the hard work of finding a trade, it's important to let it work for you and pay you for that hard work. Number 21, trade the reaction and not the news. Okay, no matter how great something fluffy sounds, don't trade it based off of, man, I believe everything they're saying. Trade off the reaction to that news. When news events occur, it's easy to inform an opinion on what that means for the market. However, no matter how we think the market should react to a particular news event, it doesn't make it so. Out of all the individual and computer traders out there, it's impossible to predict how everyone as a whole will read a news event. If it's bad news, it may not be as bad as they were expecting, so it's interpreted as good news, etc. It's important to realize that we as individual retail traders cannot move the market. We can merely react to what the herd is doing. Number 22, they write down every trade and we keep that trading journal. Keeping a trading journal is a great way to improve your trading. With your record of your trades, you can see formations. For example, you may make most money on Mondays, so trading larger sizes on Mondays could increase your bottom line. Or you may struggle on Fridays, so trading smaller sizes or not trading at all on Fridays could help your bottom line. Perhaps certain times of the day or certain times of the month produce better trades. Having that trading journal is another way of having that edge. This list is no way an exhaustive list, but hopefully it helps break down some bad habits or create some new good ones for you guys. Anyway, I know this was a long session, but I really want this to help people. I really want this to see the benefit of what you guys can do for yourselves. There is so much more to trading, but I wanted to really break down the habits of, bad trades, good trades, and so on, and how to kind of fix those situations. Ultimately, you guys have got to work on yourselves. Okay, you've got to reiterate those bad habits to good habits, and it takes time. So start simple, start one habit at a time. Make sure you're making a good trading journal, good trading plan, and working at it one day at a time. Anyway, guys, that's pretty much all I had for this session, but I'll put a description, some stuff in the description down below in the video, and you can go check it out. I've got a trading journal website that you actually punch in your trades, and it keeps all the analytics for you to process your trading journal. Make sure you have to come up with your own trading plan per se. But also TrendSpider is a very beneficial tool I'll use, guys, that literally helps me determine the channels of the trade. It does take a lot of studying, a lot of reevaluating. I teach classes on this. I've actually got an upcoming class on this particularly. I've got a 3-month class and a technical analysis class. I'll put the links in the description down below for the upcoming classes. This is a 3-month course where I break down one thing at a time, and it's 1 month, 2 months, and then 3 months. But if you guys are struggling at just charts in general, we've got a technical analysis class coming up on June 21st. So I'll give you an idea on that. It's literally just covering charts and everything to do with charts. So if you got any questions, comments, or anything, please leave those down below. You guys can message me on Twitter if you want. I'm very active as far as helping people out there. I'll even give you a free invite to a room. We got a 7-day free trial to the chat room that you guys can actually get to trade live with me if you want for free on a whole week on me. So if you guys have any questions or comments, you guys can contact me there. I'm there to help you guys. But like I said, don't be the lazy trader. I want you guys to succeed at this. It's going to take time. It's going to take repetition. And anybody can do this, guys, if you're willing to work for it. It's not an easy process, but you can do it if you work for it. Anyway, guys, hope you all have a fantastic weekend, and I'll see you guys on Monday.